You know that feeling, right? That little thud as the post comes through the door. You see a brown envelope with the HMRC logo, and your stomach does a little flip. You open it up, expecting it to match the figures your accountant so carefully put together, but it doesn't. Not even close.
Suddenly, that lovely tax refund you were expecting has magically turned into a bill, or a small payment you knew you had to make has ballooned into this huge, scary number, and you're just left there thinking, who's right, my accountant or the tax man?
Well, take a deep breath because you are absolutely not alone. This is an incredibly common problem, and believe it or not, it's very rarely your accountant's fault. So, to solve this mystery once and for all, we're going to dive into this guide put together by the experts over at ProTax Accountant. They're going to help us understand exactly why this happens and, more importantly, what you can do about it. So here's our game plan. We're going to treat this like a proper detective story. We'll start with the mystery of that brown envelope. Then we'll meet HMRC's powerful digital detective. We'll uncover a ghost in their own machine, look at the clues left behind by late data, see how tiny sums can create massive problems, and we'll finish up with your clear, actionable next steps. Right, let's dive into our first section. To understand the solution, we first need to get to the heart of the problem. It all starts with that mystery envelope. Let's make this real. Meet Aisha. She's a brilliant freelance designer based in London. Her accountant is on the ball, files her self-assessment, and gives her some fantastic news. She's due a £1,200 refund. Amazing. But then, 2 months later, that dreaded letter arrives. It says, actually, she owes HMRC $850. Now, that's a swing of more than £2,000. Aisha is stressed, confused, and now she's questioning everything. How on earth did that happen? So, who is the first culprit in our little mystery? Well, it's not a person in a trench coat. It's HMRC's incredibly powerful digital detective, a massive computer system that sees almost everything. Now, check this out. HMRC has this monster of a system called Connect, and it pulls in billions, yes, billions of pieces of data about you. It knows the interest you've earned from your bank. It knows about your sales on eBay or Vinted. It sees payments from Stripe. It even scans public records like the land registry. The system then tries to match all of this up with your tax return. But here's the problem. The algorithm is just looking at raw data. It has no context. It can't tell that a big payment you received was actually you repaying a director's loan, not fresh income. And that lack of context is often the very first reason for a mismatch. Okay, so that's external data. But stay with me because this next point might genuinely surprise you. What if I told you the problem is often coming from inside HMRC's own house? Sometimes their own computer systems are basically at war with each other. We're calling this the ghost in the machine. This is a huge one, especially if you run a business with payroll. So your payroll software sends all your data to one HMRC system, called the RTI system. Simple enough. But HMRC has another, totally separate system that manages your main tax account. And the crazy thing is, these two systems often fail to talk to each other properly. A data submission might be marked as partially successful, which means it's updated in one place but not the other. It's like one hand doesn't know what the other's doing. And this is how a fictitious tax debt can be created out of thin air, triggering a demand for tax that you've already paid. And look, don't just take my word for it. This isn't just a theory. The Chartered Institute of Payroll Professionals themselves have pointed this out. They've confirmed that these system errors can and do create phantom debts. So the key takeaway here is that this isn't just a random glitch, it's a known systemic issue. All right, our next suspect is probably the most common culprit of all, and it's the one that catches almost everyone out. It's all about timing. It's not about what information HMRC has, but when they get it. This timeline really paints a picture. Let's go back to our designer, Aisha. The tax year ends on the 5th of April. She's super organized, so her accountant files her return in May. Brilliant. But here's the catch. Her bank doesn't send the data about her savings interest to HMRC until June. HMRC's giant systems then take a few months to chew on that data. So come October, an automated letter pops out, a P800 or a P302, with a brand new calculation that now includes that interest. To Aisha, it looks like a correction of a mistake, but really, it's just delayed information finally catching up. And here's why this has become such a massive issue recently. With interest rates going up, more and more people are earning interest over their tax-free allowance. For a basic rate taxpayer, that's £1,000 a year. For higher rate, it's just £500. It's now incredibly easy to go over that limit without even realizing it. And the moment you do, that late arriving data from your bank automatically triggers one of those confusing letters. So, we've covered missing data and late data. But what happens when both your accountant and HMRC have the exact same information and the figures still don't match? Well, this is where tiny, almost invisible differences can cause big, big headaches.
Okay, here's a fantastic pro tip from the team at Pro Tax Accountant. Sometimes the whole problem boils down to simple rounding. Your accountant's professional software is precise to the penny. HMRC's system, sometimes it just rounds to the nearest pound. Or their system might apply your tax-free allowances in a slightly different, less beneficial order. And get this, HMRC's tolerance for a difference in the final tax bill is just £5. That's it. A tiny variation of £5 and 1 cent is enough to get your return flagged and an automated correction sent out.
And sometimes the exact amount of the difference is the clue. It's like a little breadcrumb trail. For instance, if you get a letter and the discrepancy is exactly £250, it's almost certainly pointing to an issue with a marriage allowance claim. This usually happens because your income has just tipped over into the higher rate tax band, which makes you ineligible for it, but the systems haven't quite caught up with each other yet. Okay, so we've cracked the case. We've identified the suspects. Now for the most important part. What on earth do you do when one of these letters lands on your doormat? The absolute key is to respond calmly and effectively. First things first, breathe. Do not panic. 9 times out of 10, that letter was spat out by a machine working on incomplete data. Step 2, grab the copy of the tax return your accountant sent you and compare it to the letter. Look for the clues we've talked about. Is there interest income on there that wasn't on the return? Step 3, gather your evidence. Bank statements, your return, the letter itself. And finally, the most crucial step, call or email your accountant. Send them everything. They speak HMRC's language and can get it sorted out for you. There's actually a name for this whole frustrating process of having to call HMRC to fix a problem that they created. It's an official term called failure demand. It describes any call that's only necessary because of HMRC's own delays, process failures, and system errors. And what's astonishing is that this accounts for nearly 3/4 of all calls they get. So if you're feeling frustrated, know that it's a recognized systemic issue. You can see, right? Untangling all these knots, the different systems, the data lags, the rounding rules, it really requires a deep understanding of how everything works behind the scenes. And that's exactly why having an expert on your side, someone like the team at Pro Tax Accountant, can make all the difference in providing that clarity and getting things resolved. So if any of this sounds all too familiar, or if you just want to make sure you never have to deal with this stress in the first place, get in touch with them. All their details are right there on the screen. You can give them a call, send a WhatsApp, or drop them an email. And when you do, be sure to mention that you saw this here. And of course, we have to mention the important legal bit. The information in this explainer is for general guidance only. It shouldn't be relied upon exclusively to make any financial decisions. You must always consult with a qualified professional, like the experts at Pro Tax Accountant, before you take any action. So there we have it. The mystery of the contradictory HMRC letter is solved. It's almost never about who is right or wrong, but about a very complex dance of data, timing, and internal system glitches. The next time a brown envelope arrives, what's the first clue you'll look for? If you found this useful, make sure you subscribe to the Pro Tax Accountant YouTube channel for more clear, simple tax advice just like this. Thanks for watching.